What's up everyone, my name is Ale and welcome back to my world of stocks. So when taking a look at Nvidia, this was actually a high flyer just a couple years ago. The stock was performing very well and they've since fallen off a huge cliff, and they were actually down by like over 50% at one point. They were down huge. And at that time, I just thought I can't stay on the sidelines any longer. I got to get into this stock. So I ended up buying a relatively small position at the very start of this year. Well, it just so happens that the stock has performed very well so far in 2019. It's rallied quite a bit, but their stock price is still actually just a fraction of what it used to be from their highs. And so because of this, I've been getting a lot of questions, a lot of comments, a lot of requests for me to talk about Nvidia stock. So in today's video, we're going to do a deep dive on Nvidia. We're going to take a look at why the stock has essentially crashed, why it's been performing a little bit better right now, and where I think it's headed in the future based on their future potential, and of course also based on my opinion. Now, if you're not too familiar with Nvidia, I'll just give you a quick little recap of the company. And they basically got started out as a kind of gaming company because they developed these graphics processing units, or these GPU chips or GPU cards that go into your personal computer or into a gaming console that allows you to play video games at very high performance. Well, it just so happens that Nvidia's GPUs can also be used in the data center, where these massive servers have to store and process huge amounts of data. And with the rise of cloud computing and artificial intelligence and machine learning, Nvidia ended up seeing huge growth in their data center business, like by triple-digit percentages at a time, because of the demand for their GPU chips that are used in these data centers or in these servers. On top of that, with the rise in the price of cryptocurrencies, companies like Nvidia and AMD ended up seeing a huge boost to their sales because these crypto miners would use their GPUs to basically mine cryptocurrencies. But that ended up being a negative as well, because when cryptocurrency prices crashed, these miners no longer thought that it was beneficial enough to keep mining cryptocurrencies, so they had to get rid of all of their GPUs. And so that ended up flooding the market with all of these secondhand used GPUs that can obviously sell for a much cheaper price, and companies like Nvidia and AMD had no real way of monetizing that. So if you couple that with also the rising competition from AMD, who is now finally releasing more competitive products to Nvidia at also competitive prices, and you also couple it with the whole trade war going on with China, which is a huge market for all of these chips and cards, and you're basically left with Nvidia having a huge drop off in their sales. On top of that, Nvidia also released their new RTX 2000 series GPUs that are much more expensive, but they implement new technologies like ray tracing, which is great for video games. But the problem is that most video games don't even implement ray tracing, or haven't implemented it yet. And so gamers felt like there was no real compelling reason to upgrade to these more expensive GPUs from Nvidia when they could still get used GPUs for a much cheaper price, again, because of the whole cryptocurrency crash. And so because of that, Nvidia ended up seeing a huge drop off in sales. AMD went through similar struggles, but because AMD has been innovating a lot more recently, Wall Street has been kind of looking at them a little bit more favorably. But when looking at Nvidia, investors just kind of lost confidence in the stock. And that's kind of where we are right now. So let's go ahead and take a look at the stock, and let's see why it's been kind of going down and up. And let's also take a look at their financials, and then we'll kind of finish the video by looking at what they're doing going forward and what their future potential looks like. Now, the crazy thing is that in the past 5 years, this stock is still technically up by over 800%, which is unbelievable performance. But in just the past 1 year alone, when looking at their 52-week high of almost $300 a share, the stock has since dropped by over 40% to now trading for just around $170 per share. Again, I bought into this stock at the start of the year when it was much lower in the $130 to $140 range, but it has since climbed by close to 30% so far in 2019. Turning to the valuation, they're still a bit expensive with a trailing PE ratio of 32, although that does look like it gets better forward at about 24, thanks to a return to growth that is expected to happen relatively soon, and it still trades a bit cheaper than AMD, whose forward PE ratio sits above 31, although AMD is favored much more by Wall Street because of newer innovations like their new 7nm chips that are making them more competitive to both Nvidia and also Intel in terms of performance, but also again because of price. And AMD is usually always very competitive on price. But speaking of growth, when looking at Nvidia's financials, we can see that they more than doubled their sales from 2015 to 2018, but are expected to report a decline this year before returning to growth again the year after. That's not a big deal to me, as it ultimately provides a buying opportunity for the stock, as long as you truly believe that the company can actually kind of turn things around and fend off increased competition, especially growing competition from various clone companies out there in China. In any case, that sets them up for a return to growth of around 20% in the future, and my opinion is that this can easily be sustained if they execute in the growing markets that we'll take a look at in just a second. When turning to their bottom line, they've grown their profits from just a little over $500 million in 2015 to over $4 billion last year, for an increase of close to 600%. Year over year, that growth has slowed down to a more reasonable and sustainable 37% last year, but the concern is again this year, as it's expected to drop by as much as 20%, although that should return to previous growth rates the year after. And I'll just show you one last chart here where I break down their sales by quarters, and you can see that all the damage started in Q4 of last year, where they really started to feel that negative impact from the cryptocurrency crash. But based on guidance for this next quarter, it does look like they are stabilizing a bit and returning to future growth, at least quarter over quarter. So what exactly can fuel that future growth? Well, let's now take a look at the markets that Nvidia is trying to capture and what that looks like for them in terms of their future potential going forward. Okay, so the obvious first market is gaming, and this is a market that is growing at a double-digit compound annual growth rate by billions of dollars every single year. Nvidia's biggest play on this market is by releasing high-performance GPU cards like their 2000 series that feature ray tracing technologies, although they do offer more budget-friendly GPUs as well, like the 10000 and 1600 series GPUs. They've even refreshed their 20 series cards with what they call the Super line, that gives them around a 15% performance boost to please customers who complained about the price to performance ratios of their 2000 series, and to also give them a bigger performance lead over AMD's newest 7nm GPUs, which were very close in performance. On top of that, they also power gaming consoles like the Nintendo Switch and the newly announced Nintendo Switch Lite that have been selling like absolute hotcakes. However, there are of course many concerns to think about in this area. For one, AMD continues to become a larger threat, most recently launching 7nm Navi GPUs, and they even announced a price cut to put them in direct competition with Nvidia's 2060 cards, yet according to benchmarks, AMD's cards offer about 10 to 11% better performance. To be fair, Nvidia's 2070 Super card does perform better by about 7%, but it also costs significantly more at around 25% more. So we're still in this sort of situation where AMD may offer a better bang for your buck, but if you ultimately want the best kind of performance, you're probably still picking up an Nvidia card, because even AMD's highest end GPU is still lagging behind on performance when compared to Nvidia's. In any case, data from John Petty Research shows that Nvidia remains well in control of the market at over 77% market share in the first quarter of this year, which is also up from 65% the year prior. It is actually down quarter over quarter, but it is up year over year. I do expect AMD to steal a decent amount of that market share later this year, but it doesn't look likely that AMD would be able to dethrone them anytime soon, if ever. Still, another concern to think about that is a bit more indirect is that we're seeing a rise in urgency from big companies like Microsoft, Sony, and even Google to offer cloud gaming services like PlayStation Now, Project xCloud, and Google Stadia in what looks to be an effort to become the first sort of Netflix of gaming. We're still in the very early stages of these new ventures, but if they can successfully offer high performance gaming that is streamed to your cheaper, more budget kind of friendly computer, then it may start to chip away at Nvidia's high-end GPU sales. On the bright side, Nvidia is trying to tackle this newest trend as well with their GeForce Now service, and while it is still in beta, the company claims to already have over 300,000 users playing games regularly on the service, with over 1 million gamers still on the waiting list to enter. Okay, now speaking about cloud gaming, when looking at the data center market, Nvidia estimates that their total addressable market will be worth $50 billion by 2023, mostly thanks to the rise of artificial intelligence and high-performance computing, which they target heavily and command the most GPU market share, with their highest-end GPU products like their Tesla V100 that, when combined with their newest hardware and software upgrades, just recently broke 8 performance records last month alone, speeding certain workloads that used to take many hours to complete down to just a couple of minutes, which is very impressive. For context, Nvidia only brought in $3 billion of sales from the data center last year. Yet again, the total addressable market is estimated at $50 billion by 2025. So there's massive growth potential there. And Nvidia is going all in on this potential market as they recently announced their largest acquisition in history, outbidding both Intel and Microsoft to acquire an Israeli semiconductor specialist called Mellanox Technologies for $7 billion that will boost Nvidia's presence and performance in the data center. But Nvidia isn't stopping there, as their high-end platforms also make them a huge play on autonomous driving, which only made up about $640 million of revenue last year. But ARK Invest projects that revenue for autonomous vehicle platform providers, which is exactly what Nvidia is, should reach a whopping $2 trillion within the next decade. And while there are claims from Tesla that their autonomous chips offer better performance than Nvidia's, the fact remains that what Tesla is doing is in-house, and it will only fuel further competition from other auto manufacturers who need to catch up to Tesla. And one of the best ways to catch up to Tesla is by partnering with the next best option, which as of right now is definitely Nvidia. And we're already seeing this thesis take place, as Nvidia has already announced over 370 different partnerships that range from self-driving cars and semi-trucks to mapping software and detection sensors and more. Auto partners include big names like Toyota, Volvo, Mercedes, Audi, Volkswagen, and more, while other numerous partnerships include DHL, Airbus, Bosch, multiple universities, Sony, BlackBerry, Here Maps, and even Baidu, all using Nvidia drive platforms. And one last thing that I'll mention before wrapping everything up is that something I never hear people talk about is the massive growth potential of smart cities in the future, which is a market that could be worth trillions of dollars over the next decade, according to Allied Market Research. And if you guys don't know anything about smart cities, it's basically cities that have everything inside completely connected through sensors, connected hardware, and the transfer and processing of large amounts of data so that city functions can run autonomously and more efficiently. And that's really where I think we're headed in the future, given the overcrowding of major cities where we need everything to run more efficiently. And that's exactly what Nvidia specializes in, so I think they'll be a major player in that market, as well as the growing Internet of Things market as well. And to fuel all of this growth, Nvidia continues to increase their research and development budget every single year, spending over $2.5 billion over the past 12 months, while major competitors like, for example, AMD, sits far lower by over $1 billion less. And their future spending can easily be funded thanks to strong cash flow and a very solid balance sheet that sports a current ratio of almost 9 times their current liabilities. Of course, you do have to keep in mind that pending acquisition of Mellanox, but even then they should still be more than fine after the acquisition. Not to mention that while you wait for all of their future growth prospects to come to fruition, you're still getting a growing dividend that only yields a measly 0.4% right now, but is at least growing at a double-digit 5-year growth rate of almost 15%, with 6 years of consecutive growth ever since they started paying it, and an extremely low payout ratio of less than 12%, meaning that it's likely to keep growing in the future. So again, when looking at Nvidia, I think if you're going to invest in this stock, the story has to all be about future long-term potential. I think if you're looking out just a couple quarters, you're probably going to be very disappointed with this stock. But for me personally, when looking at my position, I'm already up by around 20%, maybe a little more. So I'm not really willing to add to my position at these levels because I'm always hesitant to buy a stock when it's going up. I'm much more comfortable buying a stock when it's going down, which is what I did with Nvidia, and it's rewarded me pretty well so far because of that. But again, my whole vision is long term, so I have no plans of selling the stock. It's a pretty small position in my portfolio. It's probably like, I don't know, it's got to be like less than 5%. I don't remember the last time I checked. Probably around 3% or something like that, 3 or 4%. But it's still a pretty small position of my portfolio. But it's a position that I don't have any plans of selling because I'm looking out really long term. And if the company actually executes in all of these massive markets where they have a ton of growth potential for the future, then I think this could be a stock that I end up holding for many years, if not decades. It could actually be decades, but that really depends on where this company kind of goes, how well they execute, and what competition looks like in the future. I honestly can't predict the future. I don't know what their situation will be, but for right now, I think the future outlook in terms of looking like a few years, maybe like 5 to 10 years, the future outlook still looks pretty good to me. It's definitely a high risk stock, but I think it is also a very high reward potential stock. So for me, the risk reward ratio is kind of worth it for me. But again, I'm just kind of holding my position for now. If we end up getting, well, a lot of people predict a recession will happen soon. If we end up getting just a more reasonable kind of correction in the market, which is what I'm kind of waiting for right now. I feel like stocks are very high right now. I would really like to see a nice little correction in the market. But if we get that, then that would probably be my next buying opportunity for Nvidia stock. But anyway, I think that just about does it for today's video. Actually, one last thing I forgot to mention, I am also invested in AMD. I'm not sure if I mentioned it in the video, but I am invested in AMD, and I'm also invested in Taiwan Semiconductor, and I'm also invested in Tesla. So I think those are the only real competitors that you could consider. But anyway, that does it for this video. I hope you guys enjoyed it. If you did, please consider hitting the like button. It really helps me out a lot. And don't forget to leave your thoughts and comments down below. I'd love to read those. And I will catch you guys in the next one. Take care. Have a nice day. Bye-bye.